Hi, I'm Evaldo Albuquerque, editor of FX Breakout Alert. Today I want to talk to you about the stock market. I've been telling you for the past 2 weeks that we are going to see a stock market correction anytime. And it looks like the correction has finally started this week. You can see here that the S&P 500 has been falling for the past 4 days. And this week there is a huge sell-off going on. The S&P 500 has now violated this uptrend line, and this is a significant trend line because this line has been touched by 4 points. So this is a significant violation of the trend line, and this is bad news for stocks. The other bad news for the stock market is that the S&P 500 is now trading below this key support line, 1375. Let me show you why that's the key line. We have to switch here to the weekly chart so I can show you why this line is a key area for the stock market. And we're looking at a weekly chart going back to 2007. So we can see here that this used to be an area of resistance. So there was a lot of selling pressure around 1375. Once an area of resistance is broken, it becomes support. So once the stock market broke above the line 1375, we would expect stocks to remain above the line if this rally were to continue. Because once a resistance line is violated, it becomes support. So we should have seen a lot of demand for stocks around 1375. But rather than seeing that, we can see that the S&P 500 has just violated this support line at 1375. So this is looking like a false breakout in the weekly chart, and that means that S&P 500 broke to the upside of this resistance line, but it failed to hold above that level. So this is very bad news for stocks, and it's another indication that this may be the beginning of a significant correction for stocks. If I zoom in here, you can see that the S&P 500 is now trading below that line, and if the S&P 500 closes this week below 1375, that will confirm that this was a false breakout. Again, this is bad news for stocks, and we can use that information in the forex market by simply buying the dollar, especially against emerging market currencies. Because if this turns out to be a significant correction in stocks, we are likely to see a risk-off environment with the dollar rallying across the board. We're actually seeing this for the last 2 days. The dollar has been rallying pretty much against all currencies with the exception of the yen. So if this turns out to be a significant correction, and it looks that way so far, you should be buying the dollar in the forex market. Thanks for watching.